In the meantime, the US currency is making a downward correction. Last week, the US dollar surged because the Federal Reserve came up with a more hawkish policy update than expected. Now traders anticipate that the Bank of England and the ECB will follow suit. Let's discuss these scenarios in a video calendar on InstaForex TV channel. While the Federal Reserve is fine-tuning its agenda for monetary tightening, the Bank of England has already taken action. At the policy meeting in December, the regulator raised its key policy rate to 0.25% from 0.10%. Investors and experts reckon that the regulator is likely to decide on another round of monetary tightening with a rate hike to 0.5%. Indeed, robust employment and a steady pay rise are convincing arguments for increasing interest rates. Besides, soaring inflation pushes the central bank into another rate hike, so the market predicts that there is an 85% chance that the Bank of England will dare to double the key interest rate this time. If the forecast comes true, the pound sterling will receive solid support. There is another crucial event to take place on Thursday. The ECB is also holding its policy meeting. The regulator will hardly venture into a rate hike. Nevertheless, the ECB is expected to tighten its rhetoric. Rampant inflation is still raging across the euro bloc, hitting historic highs. Recently, the report on the labor market revealed an unexpected decline in the jobless rate, thus setting the stage for the ECB to shift towards hawkish rhetoric. If the EU monetary authorities eventually signal monetary tightening, the euro will assert strength in response. Apart from the policy meetings, market participants will get to know final PMIs for the European Union economies, but they are likely to downplay the data. The news and decisions from the monetary authorities will certainly overshadow other economic data. Later on, the data from the United States will make an impact on market sentiment. The Services PMI from the Institute for Supply Management will serve as a market catalyst. The fresh report could confirm that business activity in the US service sector was losing momentum in January after a peak in November. Notably, the index remains at elevated levels because demand for services is still high. Therefore, consumers and businesses are struggling against soaring inflation. On Friday morning, the Reserve Bank of Australia will announce its policy decisions. Previously, the regulator put the cash rate on hold, but cancelled the bond buying program. The central bank still has no reasons for raising interest rates. Inflation has not exceeded the target level yet and remains much lower than in other countries. It's complicated to predict the market response. Immediately after the Reserve Bank of Australia's policy meeting, the Australian dollar skyrocketed and consolidated at highs versus the US dollar. The Aussie spiked amid the weakness of its American counterpart. And this time we will see the same scenario replay, so the currency pair will climb. Above all else, the official data on the US labor market is on investors' radars this week. Yesterday, market participants were shocked by the data in the ADP employment report that prefaces the data from the US Labor Department. The ADP payroll processor reported contraction in the private sector's employment. The Omicron variant is to blame for job losses. Analysts predict that the US private and public sectors added 166,000 jobs in January, excluding farm employment. Now it's evident that the actual growth was much lower. Hence, the US dollar will extend its weakness across the board. You were watching for InstaForex TV channel, and we wish you profitable deals. See you!